Everybody, Eric Hendrickson, give me the Mortgage Minute for the week of January 27th. Well, this week we have a lot on tap. Actually, the week started out pretty exciting this morning. News of the Chinese AI company DeepSeek and some of their initial testing with their AI software comparable to OpenAI and others at a fraction of the cost. So we're seeing a very large tech sell-off in the equity markets, and bond rates, bond yields, mortgage rates are a beneficiary of that. So this morning the 10-year Treasury is as low as it's been in several weeks. Whether that's a temporary phenomenon or not, we'll see, but definitely making things interesting as AI is going to be a bigger and bigger discussion as we go forward in 2025, and that could have some serious indirect impacts on the mortgage business. But on the more traditional front, this week what we have on tap, we have the big Fed meeting. It's widely estimated that there will be no moves at all, so they're just going to stay put. So they've cut the last three meetings, but looking at holding tight at this point, the odds of potentially a March or a May cut are a little bit greater. But really, if they stay to script this Wednesday, there shouldn't really be a lot of impact there on the mortgage markets. But what would potentially have an impact is the PCE coming out at the end of the week, personal consumption expenditure. It's a big inflation report. The Fed looks at it very closely. If that report comes in at or below expectations, kind of building off the CPI, the Consumer Price Index inflation report from a couple weeks ago. So if PCE comes in low like the CPI, we could get a nice mortgage rally. So that's really the big news for this week. So we're keeping our fingers crossed that we have great inflation data there, and we can kind of keep pushing these mortgage rates, the 30-year conventional rate, kind of get it down underneath 7, moving back closer to 6 will be our goal. So that's the news for this week. Have a great week. Talk soon.